The question of whether the rich or poor pay more taxes is a contentious issue that has been debated for years. Some argue that the rich should pay more taxes because they have more money and can afford to contribute more to society. Others argue that the rich already pay their fair share of taxes and that increasing their tax burden would be unfair and discourage investment and economic growth. So in this video, we are going to discuss who pays more taxes, rich or poor. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. There are 7 federal income tax rates in the US, ranging from 10% to 37%, and your taxable income and filing status determine which tax brackets and rates apply to you. The top marginal tax rate remains 37% for individual single taxpayers with incomes greater than $578,125, $693,750 for married couples filing jointly. However, low-income Americans face higher payroll tax rates than rich Americans, with Americans with less than 5-figure incomes paying an effective payroll tax rate of 14.1%, while those making 7-figure incomes or more pay just 1.9%. This means that while the rich pay more in taxes in terms of total dollars, the tax system is not always progressive, and low-income Americans can face higher payroll tax rates than the rich. The Tax Foundation and the White House, the highest-earning Americans paid the most in combined federal, state, and local taxes. For example, the top quintile, those earning $130,001 or more annually, paid $3.23 trillion in taxes, compared with $142 billion for the bottom quintile, or those earning less than $25,000. Due to the system of tax benefits and transfers, such as taxpayer-funded programs like Medicaid and public housing assistance, the lowest-earning Americans actually receive more from the government than they pay in income taxes. Studies have shown that billionaires and giant corporations pay a smaller tax rate than most teachers and retail workers. For example, a study by the White House found that the 400 wealthiest U.S. families paid an average income tax rate of just 8.2% from 2010 to 2018. In contrast, low-income Americans face higher payroll tax rates than rich Americans, with Americans with less than 5-figure incomes paying an effective payroll tax rate of 14.1%, while those making 7-figure incomes or more pay just 1.9%. While the rich pay more in taxes in terms of total dollars, the tax system is not always progressive, and low-income Americans can face higher payroll tax rates than the rich. Tax day arrives on April 18, with about 168 million Americans expected to file individual returns this year. But of those filers, representing everyone from workers to retirees, one group will pay the bulk of the nation's individual income taxes. The U.S. tax system is designed to be progressive, indicating that higher-income Americans face higher tax rates, while lower-income people pay a smaller percentage of their earnings toward federal taxes. Because of the system of tax benefits and transfers, such as taxpayer-funded programs like Medicaid and public housing assistance, the lowest-earning Americans actually receive more from the government than they pay in income taxes, according to a recent analysis of tax data from the Tax Foundation. Even so, the U.S. tax system has grown less progressive over the last few decades, with tax legislation such as the 2017 Tax Cuts and Jobs Act enacting large cuts for the rich and corporations. The average top marginal tax rate for the rich stood at 81% between 1944 to 1981, compared with just 37% for the highest earners today. That's prompted some policy experts to call for higher taxes on the rich and corporations, an effort that President Joe Biden has championed with his call for a wealth tax and for bumping up the capital gains tax. When policymakers or taxpayers discuss tax policy, the conversation inevitably turns to who pays, who should pay, and how much they should pay, the Tax Foundation's analysts wrote in their report. To answer that question, the Tax Foundation examined the combined impact of federal, state, and local taxes against the benefits of transfers from federal and state programs such as Medicaid, unemployment income, Social Security, and community services. Its analysis is based on 2019 tax, income, and other data. State taxes can impact overall tax rates for different income levels. Individual income taxes are a major source of state government revenue, accounting for 40% of state tax collections in fiscal year 2020. State income tax rates and brackets vary widely, with some states having no income tax at all, while others have rates as high as 13.3%. The state tax burden can also vary depending on the state's tax structure. For example, a study found that raising the income tax by 1% will lower personal income growth by 0.93%. Low-income Americans face higher payroll tax rates than rich Americans, which can vary by state. Americans with less than five-figure incomes pay an effective payroll tax rate of 14.1%, while those making seven-figure incomes or more pay just 1.9%. State and local tax burdens as a share of income have fallen slightly from 11.7% in 1977 to 11.2% in 2022 as the pandemic era. State taxes can have a significant impact on overall tax rates for different income levels, with some states having higher income tax rates than others and low-income Americans facing higher payroll tax rates than the rich. Who pays the most? The highest-earning Americans pay the most in combined federal, state, and local taxes, the Tax Foundation noted. As a group, the top quintile, those earning $130,001 or more annually, paid $3.23 trillion in taxes, compared with $142 billion for the bottom quintile, or those earning less than $25,000. The top fifth includes the nation's highest earners, who pay much more in taxes than those at near the $130,001 threshold. For instance, the top slice includes the nation's roughly 900,000 households that earn $1 million or more a year. As a group, they are projected to pay $772 billion in federal income taxes for 2022, or 39% of all federal income taxes, according to a projection from the Joint Committee on Taxation. By comparison, there are 29 million U.S. households with annual income between $50,000 to $75,000. That group is expected to provide the federal government with about $44 billion in taxes, or 2.2% of the total pie, the analysis found. The average federal income tax rate was 13.6% in 2020, according to a January analysis from the Tax Foundation. But the top 1% of earners paid an average rate of about 26%, while the bottom half of taxpayers had an overall rate of 3.1%, the analysis found. Money back from the government. But after adding in the impact of transfers, the difference is even more stark, the Tax Foundation noted. The lowest quintile of earners, or those with income of $25,555 or less, have a combined tax and transfer rate of minus 127%. In effect, that means they receive $1.27 from the government for every dollar they earn. The top quintile, meanwhile, have a combined tax and transfer rate of almost 31%, which means they pay about 31 cents for every $1 earned. In effect, the top quintile funds about 90% of all government transfers, the analysis found. Due to the highly progressive tax and transfer system, a household in the bottom quintile earned an average of $22,491 in pre-tax and transfer income, but had approximately $54,900 in post-tax and transfer income, or money, in the form of benefits, since they received an estimated $32,409 in net government transfers, the researchers noted. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon